Okay, what's up, team? I'm going to go ahead and show you a trade I took today in MNQ. First off, it's been a while. I've been around, I've been trading actively and also getting some engineering degrees finished up at my late age, but wanted to talk a little bit about how you guys can even use a free tool at the CME Vol2Vol. So overnight here we had this big run up from 2 days of selling off, right? Let's go to the macro kind of here. I don't really like to look at macro too much for intraday. It matters and then it doesn't. But, 2 days of sell off, so we're getting some good pullback up here. I'd expect some lower, but I can't, as a day trader, I can't engage with macro as much as more of an intermediate time frame is more important. So we got on a 3-minute chart here, the sell off both Thursday and Friday. So we're having some aggressive pullback, right? What some traders assume is that if the market opened, there could be some responsive selling. But in this case, it didn't happen. And we saw this attributed a lot to the gamma, right? So we talk about dealer positioning. The CME Vol2Vol tool, we saw that at about 22,900, there was just in the money ton of calls in the money. And people question that call resistance is supposed to be big call level should be resistance, but it's not essentially. In fact, we can see how this little red dotted line, how volatility, that's the vol smile. So as price goes lower, you can see how it increases normally. But on the flip side too, later on in the day, this is how it looked, right? So this is intraday. This is free. You guys can get it from the CME. But we can see a lot of more calls came into the higher end. So as price was pulling back in the initial balance phase, which is the first hour of the day over here, I found a good spot to go long around 23.2 with a couple of micros of NQ. You could do your size however you need to. That's where I'm comfortable at trading. There's enough notional value on that. But anyway, we saw, gosh, where is that at? A lot more calls coming in, right? And you can see this curve also increasing to the upside. So dealers assume that they're hedging back down the other way, right? So they don't get buried. And this is what causes usually these, for the most part, it's kind of like that GameStop theory, right? These big moves, these big one-way moves that basically without any selling off. So you definitely on these kind of days don't want to be on the wrong side. Just stay small and be patient and give it time to work. So that's kind of the way I played it. Now, in the gamma side, with Mentor Q, which is a third-party tool that I use, other than the free one, I usually lean on the free Vol2Vol because it's intraday futures for free. With a lot of these other companies like Spot Gamma and Mentor Q, the futures data, it's end of day only. So you only have the prior day's information, and then you're using levels from QQQ for the NQ, or SPX or SPY for the ES, and then there's conversions and stuff, and the third-party tools do all this for you, so it is phenomenal. But again, I like raw data, and I can trust the CME for its source, and plus it's intraday. Even if it's delayed a bit, it's still going to give me clean updates. If you see here on the website, I'm looking at soybeans, right? For example, you can look at any product you wish to look at all through the this tool. I think you just got to sign up. You got to log in, which is free. So you could look at the energies, all the different asset classes, including crypto. Some of it looks noisy. I haven't really looked at this, but just glance. Here's Bitcoin futures, and there's no volume, right? Because this is looking at the options, right? Bitcoin futures does trade, but obviously not a lot of volume there. So if we go here to the product and go back into equity indexes and select NQ, you could also look at the micros. I just look at Nasdaq and then I trade micros. But you see this smile went up, right? So it works both ways. People get it wrong that volatility only kicks off in one way. This is implying a pretty positive call-heavy day, really. I mean, and this thus all you saw was upside. Where's the 3-minute? Okay, so broke into the mid of the initial balance. That's where I went long. Also on the book map, it was Gosh, that's heavy cover right there, protecting that price. But we got in around here, 23,190, close to the mid, the session mid. I just lost my book map. Yeah, it just shut off on me, guys. Sorry, but you got the gist of that part. I'll do more sessions where I'm showing from TradingView, aligning with where price is for the intermediate time frame to put on some good day trades, looking at that dealer game up positioning, and then using Bookmap pretty much as the top of the iceberg tool to get the most precision entry in, see if there's any potential obstacles that are in the way, so you'll know where to maybe discretionary. And I was talking to somebody about this that messaged me over the weekend. Yes, we used to do system trades here, algorithmic projects. We've done it all, from spread trades, hedge trades. That's what this channel is. It has kind of years worth of our projects and portfolio and how far I've come. At the same time, obviously helping people. But using Bookmap, yeah, I was telling somebody that, Bookmap, what it is, once you already identified where you want to go, your bias, or be able to shift your bias, don't get stuck on a bias early, the Bookmap order flow will help you make discretionary decisions, because sometimes you're not going to get through a level, or you're going to be front run by an algo or other traders. So sometimes you got to skin off a little early and not try to hold every time to a destination. There's a saying called "don't be a dick for a tick," and lately I've been kind of falling trap for that too. Like over a couple of dollars, getting big pullbacks on me. It's not worth it. So the Bookmap helps with that. Again, it crashed on me. I'm not going to turn it back on for today, but just want to give you guys the idea. I'm also going to start sharing when I come back on. Here's my net lick, just over 90 grand. I have a goal to get into a portfolio margin over 150. I'm doing, let me put this on a little privacy setting so my account number don't show. I am doing right now a couple of naked puts in some affordable stocks that I don't mind taking ownership of. But today some of the premium is coming in. So we got Alco over here, which we're in the money. We're not getting assigned yet. I don't mind getting assigned. Again, this is a Warren Buffett style strategy. So what we're doing is we're taking, let me close that. We're taking a naked put, collecting the premium, then monitoring it at least up to 21 days out. If we don't already collect 50% of that premium, and it's good to cancel orders sitting there to collect that. If we get assigned, so you could say worst case scenario, we're going to collect premium. Now this happened to me in late April. I had a naked put I sold on Nvidia. I was quite upset. Shame on me. I should have just bought 100 shares. We went down about 95 to 100. I'm in assignment position, and no one was assigned. There was no assignment. Yeah, we took a lot of premium on that trade, but kind of sucks. Sometimes what happens is, the problem with naked put is this: if you really did want the stock, and it gets past you and goes back up, you're going to get the premium. You're going to be left out. Nvidia is something that saddened me. These kind of stocks like Alcoa, I wouldn't really care. Like if they assign me the shares, I wouldn't mind taking Alcoa. Alcoa has like a beta of 2. So for those that don't understand what that is, relative to the weight of the SPY, Alcoa moves basically 2 times the potential, that volatility. So if it was a even beta 1, then it's moving same length as the market. If it's minus that, then like Victoria's Secret is that I'm in, it won't move as much as the market moves. So it's just the weight of its volatility relative to, I want to say it's the SPY and not the SPX. Don't quote me on that. But basically, Alcoa is a aluminum company, huge global production, and obviously with tariffs and all, they've been taking a beating. They've been taking a beating for a little other while before even tariff talk and all that stuff. But it hasn't helped their stock at all this year. I just don't mind owning this and taking it up to an upside. Either that or we collect the premium. And the second one is Victoria's Secret. Now, I'm not a fundamental guy, but after I put on this naked foot, I did kind of ask myself, dude, you know, let's not forget what happened to Sears and all this retail. However, then looking into it, you know, they're getting pretty beat up. They have activist investors on them, trying to have them change the board and get their crap together. But they've had a lot of store closings and blah, blah, blah. Why? Probably because of the malls. I just thought, hey, it's Victoria's Secret, man. You know, like, how could that disappear? It maybe can. So it's a little risky one. I am hoping to really maybe not take delivery of that and just collect the premium. So there's some premium coming in today. Premium coming in on Alcoa, even though we're in the money. I'm pretty sure they might not early assign us on that. Those are those two positions. I have positions, like I said, most of this portfolio is sitting in fixed income. I'm a little bit too busy. I trade prop for the micros, and then I pull that money out every 2 weeks. I tax myself, and then I pay myself, and then whatever is remaining, I'll just dump into the Tasty Trade account. And as you guys know, this is not a fake account. You can't have a sim fake account on Tasty Trade, but that's kind of what I'm doing there on those. I like seeing the premium coming in on these. I wouldn't mind grabbing that equity and redeploying it on some other stuff. But I'll keep you up to date on that. In the meantime, again, if you guys want to get some information on this is free. Go to the CME group or just Google Vol2Vol. Vol2Vol is volume to volatility. But this is basically showing you some good dealer positioning. I've been doing really successful using these as mean reversion levels and directional levels and stuff. So it takes time to understand it. There's not a lot of videos out there on it. I wish CME did more of their direct educational content on it. They don't. And that's all I wanted to share. I wish Booknet didn't crash on down on me. I would have done a little bit more order flow viewing for you guys, but maybe next time, okay? So it's been a while. We'll miss you guys. We'll see you all soon. I'm just really busy with trading and then finishing up my degree this whole school year in engineering. It's gonna be. I know my videos are a little scattered on far as time frames, but we'll see you soon as possible. Okay, keep you up to date. Any questions? Just go ahead and just go ahead and put it in the video here, and I'll get back to you. All right, then take care.